Good morning, guys. Trader Joe here. Just looking at the markets this morning. Markets just opened, and accounts looking really good on the funded with Top Step here. We are at currently 3126, which is also the account balance high. My worst day right now is plus 594. Best day 1584, which is about an average of about $1,000 a day. I don't know. These metrics really don't mean much because we're only at like 3 days of trading in this account. And this first day I was using the scalping strategy, which proved to be more of a 50-50 percentage. And even though I was making more of my winners than my losses, it's really very risky. You can see that I put the account that day in 1500 as drawdown, but I did end up plus 1500 in the day when I did have the correct read on the market, and which made me realize, quality over quantity. If you got the right read, just look for the best entries and then just stick with those rather than trying to scalp the direction. And I believe that'll work to my advantage. And so far that's proven right, because then we traded that Monday a total of one trade. That was on the Nikkei for 594, and then we took another trade on the Nikkei on the 16th, and then a trade on the which wasn't actually like counted as two trades, but it was one trade on ES for two contracts. One stopped out at break even plus a tick, the other one stopped out at a profit of 500. So you can see these metrics, I'm much more comfortable trading quality over quantity. So let's look at what's going on in the markets today. I was looking at the YM here actually. I really like what I'm seeing here. I'm not as comfortable with this market. The little bit that I've traded it has been a little bit of a struggle for me, but the approach I'm looking to take would be similar now to the one that I currently have, which would be we either look for breakouts of continuations, which you have a lot of those here, and we even had one this morning. I mean, we had this, call it 3-tier drop here, and then right on the open, if you would have maybe even drawn like a slope line across those consolidations, we had a nice breakout up to the high here, pulling back off the high. But I mean, this thing's up 100 and call it 150 points. Just this move right here on one contract would be $750. I mean, that's a good trade already. And yesterday, I was looking at trading a break on ES, and this was the 530 candle that I traded yesterday. Had I just traded YM, I mean, look, this thing didn't look back. It went from 40,600 all the way clearing 41,200. So that's a 600 point move. Yeah, about a 600 point move. And I don't know. Obviously, I don't know if what I would have captured here. Maybe maybe I go for 100 points, which would have been the equivalent of the 10 points on ES for $500, and then maybe I go for let's see, if I go for, let's say, breakout here 7. So yeah, and then if I go for a runner for a couple hundred more points, maybe I get out somewhere just below 41,000. But yeah, I'm kind of liking the way this market moves, but I'm just watching it. I'm not just going to jump into trading a market based on a little bit of information. So that's the 5-minute. Zoom out to a 15-minute. Yeah, it goes through these longer consolidations, but this is pretty typical of how markets trade. Like, you'll go through a period of longer consolidation, and then you'll go through some shorter consolidations like we're in now. Go through some deeper pullbacks, but these consolidations, if you trade them as breakouts, all look pretty easy to trade. And then yeah, you're going through off of this double bottom, call it, or maybe even triple bottom, because you have this low, and this low as it was building up into this move. And then you had this bear trend, but again, you had these consolidations, the breaks, and you get the nice dump. This one was a little more choppy, but when you did finally get this break, it looks like it was on 5:30 news. The break on this day, just tested this low, but then you got this continuation through the low. I don't know. I'm gonna keep looking at YM. This, this kind of looks to fit into my strategy of trading pullbacks and trading breakouts. Looking for structure and then being able to identify high edge setups around that structure when volume's coming in. So, and just getting a good bias on, based on all the structure combined, which way the trend is going. So yeah, you had this little double top. You had this break of this low here with this consolidation, and then yeah, you basically get confirmed downtrend, and then you got a big move off the confirmed downtrend in this little bear flag here. You had kind of this bear flag here, big move down off of that when the volume looks like, yeah, as the volume coming in. So yeah, I'm gonna keep studying this market. I may even trade it a little bit in demo. Not sure yet, but yeah, we had this break. I had this all-time high marked here with this green box. We had the break yesterday. We traded above it here in this consolidation for a couple days, and then yesterday at 5:30, big breakout. So different than the ES, because ES, we did make the target yesterday. I think I wrote it in the description of yesterday's video that I just posted this morning. But yeah, we had the breakout. We did eventually test the high, but off of the high test, we have broken down now today. And I don't really see a good setup here because we're in a bear trend, so we got lower highs, lower lows. We've got volume coming in that now has broken this lower high as a retest. So my read is we're probably consolidating today. Kind of the same thing. Well, NQ is actually continuing mission to the downside, and I don't do that well in bear trends, so I'm just avoiding it. I prefer to trade on the long side. I feel like it's easier to trade, at least in these markets. Maybe in the YM, I'll do better on the bear trends, but I don't know. Like I said, I gotta still look at that market. I like Bitcoin, but I don't really trade it because the commissions and spreads are too high, so it's not worth it to me to trade Bitcoin. But yeah, we're in a nice, off of this double bottom, and then we traded along this level as resistance, so we got testing and testing, but we got these higher lows building up into it, and then we broke through it on Sunday. And all the cryptos are basically the same thing. And then gold got a little small consolidation going on here today from last night, but we are breaking out from a larger consolidation that we were in here. You can see on the hourly since, I don't know, April. We've been in this consolidation. But yeah, like I said, it's pretty typical of how all markets move, right? Like I just said, you'll go from low to high. In those periods, you'll have small consolidations. Then you'll have larger consolidations. Pull back. You see you got small consolidations again into this high. But then, and then obviously hindsight's 20/20. But yeah, you get larger consolidations. But when you break out of these, then you're kind of free to trade the smaller consolidations until you get stuck in the larger consolidation again. Like this was, call it a medium-sized consolidation, but then you broke out, you know, and then you wouldn't have known that this wasn't a medium consolidation. But yeah, obviously it looks like it trapped some traders, and then it started this larger one that we have just now broken out of. So I feel like this on gold would be a good time to look to get in on some of these smaller consolidations for breakouts, since we just broke out of this larger one at around 24.50. But I don't really trade gold that much. I've dabbled in gold, I'll say, but my most traded markets are NQ and ES. So I don't know, I just want to give you guys more in-depth analysis today on how I trade, since I'm not really looking to take any trades with the context of how the markets are trading right now. Yeah, zoom out to the hourly again. ES, large consolidation trend with small consolidations, large consolidation trend, small consolidations, but now it looks like we're in a larger consolidation, which, but these are the spots where you got to be careful. Obviously, that's, like I said, so that's why I'm giving you more in-depth analysis how I trade, because we do not want to trade large consolidations when we're stuck inside them and get chopped up and lose money. Obviously, trading's risky. Most traders lose money. I believe this is kind of the areas that do it, where they're just slapping on, like, hey, this market's long, just slap on, looks like we're breaking out. But hey, anybody that tried to buy that breakout yesterday up above this high literally just got wrecked, and it just stopped out below all these lows where they probably had their stops. Looks like we might be catching a bid here, but see, I mean, I need to see this consolidation start to work itself out, start to see some better structure to trade. You will see me trade the smaller consolidations like yesterday when I see there's a good chance of this thing continuing to a larger trend. But yeah, I don't get married to any of my trades, because nobody knows at what phase of the market we're actually in. We'll look at the NQ on the hourly here and zoom out a little bit. Which, I mean, yeah, definitely looking like a deeper consolidation. I mean, this thing, we could even be in one of these really deep consolidations potentially, because we've been on a nice run up here for a while. Haven't had one of these deeper ones for a while. Which, if we zoom out, right, like we haven't had one of these or one of these long, deep consolidations, which it looks like we could be due for. So we might be pulling back into this gap, or maybe even deeper. I don't know. We don't know until we see it play out. All I know is, as day traders, we have to know our edge. We have to know what it looks like and what's the best setups, and like have plans of being in this for the long haul, which takes discipline to not just, because we all want to just go and jump in trades and make money. I mean, I get it. I've struggled with that for years. So, but you gotta get past that in trading. If you don't get past it, you'll never succeed in this game. That's why I started recording my screens, is to really be able to look back and look at what's working for me and what I need to get rid of that doesn't work. And interestingly enough, recording my screens has helped me exponentially grow in this game. So I'm doing this more for me than for anybody that might be watching, to tell you the truth. But if you guys want to watch and learn from how I'm learning, but there's no better teacher than studying yourself, and that's what I'm finding. So studying my behavior, my thoughts, that's and how the market tries to deceive your thoughts and to trap you in your behaviors, and to become disciplined to not allow the market to deceive you or trap you into the enticement of what may appear to be an endless stream of a money glitch that's just a facade that does not exist. So once you start to realize these things, then you start to see it for what it is, and you start to really want to be selective on where you're entering trades, where you are placing your risk, the amount that you risk, so that your risk of ruining the account is low. The lower the better. Obviously you still have to do your best to build, but that really depends on your edge. So I believe my edge is growing every day, and that it's currently really, that it's really good edge. But this video is starting to get a little bit long, so I won't go too much more in depth about that. If you guys want to learn more about how to get an edge in markets with psychology, I would recommend watching Mark Douglas. He's helped me a lot. I've studied other traders, and I learn a little bit from all of them. I've just the best ones, I would say, right now, to really examine how patient they are, how calculated they are. Those are the qualities, and it doesn't even matter what markets they trade. It's more about their mindset and how they've mastered getting an edge over the markets, which really is a mastery, a self-mastery. Would be, guys like Patrick Whelan, Trades by Matt, and Nick Sean. Those three traders, I would say, are the true crushers, that at least have put themselves out there. And probably in that order, from, I won't say from first to third or third to first, because I don't want them to know. But because they're all crushers in their own ways, and they all have different. They all literally have different strategies. Patrick is a breakout trader. Matt has his own way of defining what I would probably call order blocks, and he trades that. And then Nick Sean trades reversals. So they literally all have a different strategy, and they all crush it. So I would say, yeah, it's up to you. I'll let you guys decide who's the biggest crusher. I would say the thing you want to look for is who's mastered their psychology the most to go on the lowest chance of tilt, um, uh, which would put your account at the lowest risk of ruin. It's not about your I mean, your strategy is also a factor on your risk of ruin, but the biggest risk of ruin is actually your psychology. When you feel beat up by the market and you want to get revenge. So you don't want to give the market that kind of opportunity. Knowing yourself. Because you're really just mad at yourself a lot of times that you've allowed drawdown when you were deviating from your strategy, and then you want to get the revenge. You're really, it's more of a regret than anything, because the market can't betray you. It's a self-betrayal. It's all internal. But I don't know. If you guys want more videos like these where I go over my strategy versus actually just showing you my trades, my entries and exits and all that, let me know. This is Trader Joe. Hope you have a great day, and stay blessed, stay safe. Out.